What's going on, traders? Welcome back to the weekly Forex Outlook and Reviews. I hope everybody's doing okay. This week has been a very, very good week. The momentum in the market has been absolutely fantastic, and there's been many trading opportunities to be able to take advantage of. I hope you've been patient. I hope you've been disciplined, and I really do hope you was able to capitalize. Looking into next week, it's looking very good as well. We have a lot of news, which is something that we all need as traders. Even if we're not fundamental traders like myself, that's completely fine. But the volatility that it creates is something that we all look for so that we can get into some good opportunities and moves in the market. So taking a look at the red folder news only, we've got Tuesday, we've got the Outlook reviews for the yen. On Wednesday, we have Aussie Dollar CPI. We also have tentative, so the OPEC meetings. And in the evening, we have 7 p.m., the US dollar FOMC statements. That will be interesting. See if the dollar will start to strengthen, because at the moment, it looks like it's struggling a lot. But we'll see what happens. Not worried. As long as we can identify a weakness or strength, we can take advantage of either or side. Thursday, we have dollar news GDP at 1:30 p.m. And then on Friday, it looks like we are clear. So there is a lot of orange folder news. I'm not going to go through all of that, but these are the ones you really want to be careful of. And just make sure that you're managing your trades. And if the markets are not moving, they're a bit flat, wait for some of these news releases to come out to see if they shake up the market a bit and give us a more clearer direction on currency strength or weakness. But let's head over to the charts. So today we're going to go over 11 pairs as we usually do, starting from pound USD all the way down to gold. We have a nice mix of pound, yen, euro, and dollar here. And this is something that you want as part of your watch list. Make sure you have a good mix of dollar, pound, euro, and yen, so you're able to capitalize on the major currencies and some of the best movements in the market. If you're messing around on some of the minor pairs, you might miss them. If you have too many pairs, you might find it as a distraction. So make sure you've got a good mix. And the mix here that we have out of these 11, I think, really covers most of it. So the first pair that we're going to take a look at is pound USD. Now, I'll be brutally honest with you. We have seen a weakness in the pound, especially this week. Now, seeing that the markets here are making lower highs and lower lows, it does suggest to us that there is more of a bearish sentiment and structure that's forming. The problem is when trading a weak currency pair alongside another weak currency pair. Well, it's not a pair, but a weak currency, i.e. the dollar, is very difficult to gauge where the market could go. From a technical perspective, what we're identifying here is that as long as price trades below some of these key levels here, where the multiple wick rejections have formed to make the lower high at 39.46, then there's a very high chance that the markets will continue bearish. Now, the way I want to trade this is I want to stick with the overall structure, because that's what is telling the story here, which is price creating a structural high, a higher low that failed to make a new higher high, an area in the market where price consolidated, then broke below, and then continued that bearish sentiment to the downside. Now we have a potential lower high that's being formed here. I'm not going to look at this as a retest level or even wait for price to pull back. I much prefer to see a continuation of this bearish sentiment, and I really would like to see a break of 38.36. And if we do, then see a continuation back down to around 37.96 here. Now, I've put here management level because we have a consolidation slightly to the left where prices previously found that there was no sort of momentum. Finally, we had a break above and then a continuation. Once price breaks above a key level, usually it will act as a support or a resistance. So in this instance, what I want to be mindful of is if price comes back into this traffic area, that we can manage these trades either to break even or look to take partials off the market. If the markets start to really show strong sign of pound weakness and we start to see real volume in the markets pushing to the downside, then we have a really nice target back down here to around 37.51. It's an 83 pip move, and I do believe that if price does break and finally get below 37.96, which is this management level here, then there's a very high chance we can get back down to some of these target sells. So my bias is sell bias for at least 24 hours or 48 hours moving into next week, especially with Sunday open. And I think I'll stick to sells, looking for the breaks and then the continuations. Not really interested in the pullbacks here. If it comes back to 39.46, then I'll start to view the market as ranging, as you would expect, bringing 2 weak currencies together. So I think the best plan of action is the break of the structural low and then look for that continuation back down to the management level, or at least the target sales level. Next pair we'll take a look at is pound JPY. Now, again, we're identifying pound weakness. We are also identifying that the yen is actually strengthening, which is not too shabby. Now, with the structure of this market, it is indicating bearish sentiment, not necessarily bearish structure as of yet. The reason why I say that is because we broke out of this consolidation previously here at 150.79, and you can see we've had this move to the upside. Now, this move was immediately corrected, and you can see price broke back into this consolidation here around 150.50. Price stayed here for quite a long time. We came back down to retest some of these levels here at 149.68, and then we finally had the break. Now, I think what's important is that we identify areas in the market where the most amount of traffic is forming. And the reason why we want to do that is because we want to isolate areas where price can find the most resistance. So if we take a buy or sell, we don't necessarily want to be in the markets if price is doing this, because we know, for one, there probably isn't enough orders in the market. Buyers or sellers haven't decided to trade this pair, and probably trading something a lot easier than this structure here, or we're just waiting for something to happen. I mean, that's the easiest thing to say, right? So I think now the best plan of action is look for sells only for now. Again, 24 to 48 hours, and wait for the break below 149.26. Now, some of you might say, why are you not looking for a break above? Well, the thing is, we're identifying pound weakness. I don't necessarily want to look for buys when I know pound is weak and that the yen is stronger at the moment. So personally, it doesn't make sense for me to trade against it. Now, that doesn't mean that the market can't break above and retest and continue up or continue flying to the upside. But because I trade based on probabilities, I'm looking for the most amount of confluences I can find in order to validate why I'm taking a trade. So if I know that the structure has a bearish sentiment, at the same time, the pound is weak, and I'm also identifying that price is breaking structural lows and not structural highs, it's best that I stick to that bias until the markets tell me otherwise. Everything that's happening on the charts right now, I'm just going to listen to it because that's what talks to me, and that's how I trade the best. As far as I'm concerned, structure is structure. It never lies, even though it may not play out, because ultimately we know with trends, they make lower lows, lower highs. With uptrends, they make higher highs and higher lows. And I'm a trend continuation trader. So ultimately, I just want to stick with the bias, and that sells. So a break of 149.26 with a retest, because we have no target levels here to the left. I'll look for the retest to increase my range. So once that low is made, we'll have the pullback. Then we'll have the low for management purposes. And then I'll anticipate, once the retest happens, that the lower high will form as part of a downtrend to make a new lower low. Now on Monday, this could all change and the markets could rally up. But what I suggest to every single one of you is you right-click your trading view, you go down to remove drawings, and you start your analysis again. If it doesn't play out, just do it every single day. And guess what? Choose one bias, stick to it. If it plays out, execute the trade. If it doesn't, just walk away. It saves you messing around, trying to figure out if you be taking buys or sells, or you should be taking sells or buys. And that's not the kind of mind frame you want to be going into your trading with. You want to make sure that you have a concrete plan, you stick to it. And once you continue to do that for a very long period of time, or a decent amount of time, maybe not a long period of time, but you do that for a decent amount of time, you will start to see that the numbers will play out for you, especially if you're using good risk to reward ratio. And if you haven't seen my risk to reward ratio video, go and check it. It was the last one that I posted. Again, these videos don't get much views because everybody's looking for the Holy Grail. But I'm telling you now, if you apply some of the things that I said in that video, it will really help aid towards your profitability and ultimately your consistency in the long run. Next pair we'll take a look at is Euro Yen. Pretty simple for me. The markets are moving sideways. Now, why is this happening? Well, Euro has strengthened, which is, I mean, I guess it's going to come off the back of news. The Euro has strengthened and the Yen is strong. Meaning when you bring two strong currencies together, you get a sideways moving market. Or if you get two weak currencies together, you get a sideways moving market. This is really good for us. Even though we may not be trading euro yen, this is very good for us, because now when we start to analyze pairs like euro yen, euro USD, pairs like pound JPY, we can identify a weak currency, which is a pound, so we want to sell the yen, or we can identify a weak dollar and we want to buy the euro. So this is good for us. Use this as confluence to identify two strong currencies, especially after we've seen the evidence with the other pairs that we've looked at so far. When you see this, say to yourself, okay, it's ranging. I know I can't trade it, but I'm identifying two strong currencies together. So now maybe I can look at other pairs to find the weakest currency and then either trade with the euro or the yen. So let's take a look at the next pair. We can see here USD Jpy. Now we can see further evidence here of the yen strength and dollar weakness. The whole structure of this market is clearly identifying to us a sell bias structure and sentiment. Now we can see price making lower lows and lower highs. Price is trading here below the brick wall. Currently, we have a breakout and a break back in of a structural area low here. Now, what you need to be careful of when this happens is that at the bottom of a downtrend, if the markets, or let's say sellers, are stepping out of the markets, taking profits, or buyers are stepping in, the market will start to consolidate. Now, we're starting to see that. The markets are moving sideways. What you have to do, and just a little tip, is not conclude at this stage that it's time to take a buy. Just because you think you're going to find the bottom, you're going to get a better entry, and you're going to get a better risk to reward. At this stage, what you got to be saying to yourself is, okay, this is the behavior of USD JPY right now. Price is moving sideways. Is this a common behavior of this market structure or this pair? Well, all you have to do is go back slightly. Look here. USD JPY was in a downtrend, create a consolidation. Now, for those that were looking for buys here because they were trying to pick the bottom and get better risk reward ratios and the best entries and, whatever else, more for you, because look, the market continued down. Again, price up here around this area, when it was in a downtrend after it broke the previous structural low here at 110.29, you can see we have strong bearish momentum, a pullback lower high and a continuation. Again, we consolidated. Now, for a lot of traders, what they'll do is they'll do this and they'll try and find an area in the market where price is finding support. And then guess what? They'll see the wick rejections, the bullish candles, and they're going to take a trade. Well, more for you. The overall sentiment of this market is down, making lower lows and lower highs. The behavior of USD JPY after a strong push phase will usually consolidate. And that's what we can see here. So when we get to current price action, is it wise for us now to start to anticipate a reversal? Probably not. We know this is part of the behavior of this pair. So the best thing that we can do now in this scenario is say the overall sentiment of this market is sell bias. I'm looking for sells only on this market structure until maybe one or two things happen. The first thing that will need to happen is price will need to break the brick wall, because at the moment it's been trading below it for a very long period of time. Also, just for added confluence, I'm going to need price to start violating this downtrend and start breaking structural highs. Until that happens, there is no point you looking for buys. So in order to conclude my bias and my analysis on this pair, I'm sticking to sells. And I think the best plan of action here is to wait for price to break the level where price broke out and broke back in, creating this indecision. But there must be a reason why price is reacting to this level. So we're not going to wait for the break of 107.88. We'll wait for a break of 107.51. And then we'll look for the retest and the continuation. Moving into next week, you have to continue to identify dollar weakness here. And you also have to start identifying confluences with the other pairs of yen being strong. There is dollar news next week. And if there's good news, then you could see this market push up. I don't know how much, but it could push up. Obviously, with the trend pushing down as much as it has, there's obviously a lot of fundamentals that are playing a big part in this. And I don't think one news event being good for the dollar could turn this whole trend around, but it could send it up for a little period of time. So just be mindful of that. Watch the news, keep abreast of it. And I think the plan of action for me, so that I don't avoid taking trades that shouldn't be taken, is just a simple break of 107.51 and then looking for continuation sells. Next pair we'll take a look at is Euro New Zealand dollar. Now, I mentioned that the euro is showing signs of strength. At the moment, the market structure here on Euro New Zealand dollar is moving sideways. Now, I don't know what's supporting this right now. And to be honest with you, I couldn't really care less. What I do know is that the structure of this market is ranging and it's moving sideways. The overall sentiment of this market at the moment, since its last tap here around 66.77, is a strong push phase, a pullback, high low, and a push phase. I do believe that there's more bullish sentiment here that's starting to develop as opposed to sell sentiment. We have kind of broken above some of these previous highs here to the left within this range. But personally, I think the best plan of action is to wait for price to break above some of these key levels here around 68.23 and then look for the retest continuation up. Or if price doesn't make it to there and it continues ranging, then you're simply just going to be waiting for price to break 66.76. Now, the thing is, when the market is ranging, a break above or below is completely fine, because more often than not, if price is able to break out of an area that has been struggling to break out for a long period of time, then there's a strong sentiment in the market that either bulls or bears are taking over. Now, for some of you that might be saying, well, what about the false breakouts? And what about price stop hunting those that are selling and stop hunting those that are buying? Let me tell you something. No one cares. All we have to do is repeat the same process over and over again, and we'll win some and we'll lose some. But that's why, if you've got good risk management, you have a really good risk-reward ratio strategy that you're using, then ultimately you're going to come out on top. So whether those scenarios play out or not, it shouldn't concern you. It will happen to you hundreds and hundreds and hundreds of times in your trading career. You just got to get over it. So that's the plan with Euro New Zealand dollar. Next pair we'll take a look at is Aussie Dollar USD. The markets are moving sideways. With this, I just don't understand, again, with dollar weakness, why this market structure is not pushing up, just like with Euro New Zealand dollar. These two are, well, and a couple of others that we looked at, whilst they're in the ranges, I think I'm going to be waiting patiently for. I've identified yen strength. I've also identified pound weakness. And I think personally, it's much easier for me to trade with those two currencies as opposed to looking to try and trade absolutely everything. So I'll wait for Aussie dollar to clear up and give me a better bias. Next pair we'll take a look at is Euro Aussie dollar. Now, with the sentiment of the market that we've seen so far, Euro is showing signs of strength. It's not confirmed yet in the markets, but looking at the structure of Euro Aussie dollar, we can clearly see that price is trading above the brick wall here. We also can see prices making higher highs and higher lows. At the moment, we have a level in the market where price is failing to break above, and this is something we want to see. Now, once price starts to break above 56.09, in line with price trading above the brick wall and making higher highs and higher lows, which is a sign to us that the market is trending up, that will give us added confluence that there's a very, very high chance that price can get to our target buys, which is here around 156.67. Now, this is a 64 pip move, which is a very big range, especially if you're able to scale down to your lower time frames and look for those patterns and processes and look for those continuations to the upside. It doesn't make sense to sell here. The trend is up, price trading above the brick wall. Yes, it might be finding some sort of resistance here at 56.09, but that only supports our buys even more, because once we have the break, then there is a higher chance that price can continue to move up. If price doesn't break it, then it is what it is. Remember what I told you at the beginning? Just right click, remove drawings, come back the next day and reanalyze the markets. That's my bias on Euro Aussie dollar. The next pair we'll take a look at is Euro USD. This should be an absolute cert for you. All week we can see, and not even all week, for quite some time, we can see that the dollar has been weak. Euro has been strong. Price has been creating higher highs and higher lows. We had a level here in the market where price created the higher low. And this is a really, really good little bit of education here for you. Remember when I say, as long as price is trading below the previous higher low or the previous lower high, we wouldn't call it previous, we'll call it current. As long as price trades above or below it, then guess what? We're still by bias. So no matter whether the market is ranging or price is broken above or price is doing some sort of funky stuff within a range here, as long as price respects 2006, then we're by bias. Look here, price came back to 2006, respected structure, a really nice wick rejection here, indicating that this trend is still valid. And then we had a continuation push back up to 2073, and now finally a break. Now, it's very easy for me to say, moving into next week, at least for the next 24 to 48 hours, I will be looking for buys only on Euro USD, simply because I know the dollar is weak. I also know the euro is strong. And what I want to see from this structure, just so that I don't get caught up in any breakouts and break back ins, I just want to see price move up away from the key level to create a push phase. After a push phase in an uptrend, what we'll have is a pullback. Even in a downtrend, we'll have a pullback, but in an uptrend, we'll have a pullback to create the retest of 2075 in and around this area, and then I'll look for a continuation up. Now, if price comes back to 2006, then you can still look for buying opportunities because price has broken the high now. So the way we would view this is, because the high has been broken, the range is now invalidated. And what we'll be looking for is a clean pullback. So a really nice deep pullback into this retest level, and then look for a continuation back to some of these highs here for management purposes. You want the honest truth, just to be safe rather than sorry. I think just allow price to leave, come back, retest, and then continue up. It might get a bit confusing for some of you at this retest buys, but if you know what you're doing, then you know what you're doing. My analysis on Euro USD start of the week is buy bias. Next pair we'll take a look at is New Zealand Dollar USD. We can see it's ranging. It's a very messy range, like some of the others that we've checked out. I'm not going to be trading this pair. I mean, this is almost identical to Aussie Dollar USD. Let it go. There's easier pairs to trade and easier currencies to identify strengths and weaknesses. Final pair we'll take a look at is gold here. Now, we can clearly see that the trend is up. Remember what I said, as long as price is trading below the current higher low, then there's a very high chance that price will continue bullish. This is the current higher low. Now, at the moment, yes, we are ranging. Price is failing to break above some of these structural highs here, which is completely fine. But this only supports our buys because we know that the dollar is weak. We can see the trend of gold is up, making higher highs and higher lows. We know that the current higher low level here at 1760 is being respected. So the best plan of action right now would be to wait for price to break above 1796, look for a close above, and then a potential continuation. We do also have to have a plan B here, because we have to respect the fact that the market is ranging currently in this uptrend. So if price does start to break below some of these structural levels here, then there's a very high chance that price is now failing to continue to maintain this uptrend, and there's a very high chance price can continue bearish. So I think with gold, we're going to have to wait patiently. But if you want a concrete bias, I say we stick to buys for now, unless the overall sentiment of the market changes next week, which will mean dollar strength, and you will need to find those added confluences to support that on your other currency pairs. So that's the analysis. Moving into next week, I do hope that you've enjoyed this. I just want to wish every single one of you a fantastic weekend. Take a rest, ease your mind, clear your head, get over the emotions, spend time with your family, friends, get out and enjoy yourself. You know how to trade. Just figure out whilst you're enjoying your weekend, how can you better yourself next week? What can you do to eliminate some of the things that are holding you back? The repeatable habits that are potentially jeopardizing your future as a trader. Think about those things. The technical side, you know what to do. Everybody has a strategy. There's many out there. Just follow the plan, be patient, stay disciplined, and continue to trust the process. If you enjoyed this video, smash that like button for me, family, just to continue to share this analysis with everybody. And it really does support the channel. Turn on notifications for next time I post a YouTube video, and subscribe if you're not. Until next time, take care.